Our next guest says, don't worry about the trade war. He has one simple chart that points to new market highs. So let's get straight to the plasma, where we find Fast Money friend Tony Dwyer, the chief market strategist at Canaccord Genuity, chomping at the bit to give us his uber bullish thesis. Tony.
Well, Mel, it certainly doesn't feel uber bullish over the last month or so, but actually the market's been up 4% in the last week, and being at the top end of the range, I really kind of wanted to go through. Early in the year, we were on the show very cautious, thinking we were going to correct because there was just a ridiculous level of economic and market enthusiasm. That's been checked off. You have the Investors Intelligence bulls, which are the newsletter writers, as measured by Investors Intelligence, were at 66%. They got down to into the mid-40s last week, bounced a little bit this week, but certainly you can tell that the sentiment is uber bullish. We have unbelievable earnings ahead. We have this quarter alone, we're going to probably be close to 24% growth rate versus a year ago in S&P operating profits. And as Steve said, I think that's a really important thing because that puts our core thesis in play. Our core thesis, and forget about my opinion, I'm good at being wrong. I proved that on the banks in the last few weeks. The core thesis is the market moves with the direction of earnings. And as long as the economy is positive, that direction of earnings is going up. So what I want to do is take a look at the data behind that, because as you know, I'm all about the data. That's your 90s. That's your last cycle. This is your current cycle. You can have a lot of volatility. Unless you're going negative economically, you don't want to sell into weakness in the market. It may take a little while to come back. And I'm not saying you're not going to get corrections. I'm just saying outside of a very clearly identified recession period, you don't want to sell weakness. You want to buy it.
Tony comes over.
Is that a statement or a question?
It is a statement. Tony comes over.
By the way, before
Michelle
he gets here, can I say one thing?
He's
here. Tapestry, one of the great Carole King albums.
It is indeed.
Top 5 album for me. I know Tim feels the same way. Sorry,
I don't know why you're admitting that on TV right now.
Sorry.
Okay, back to business. Tony.
Back to business.
Let's say that the tariffs on $200 billion worth of goods go into effect at the end of August. Does that make you less optimistic that 3,200 will be the year-end target or level of the S&P 500?
So I had a 20 multiple. I raised my estimate by $5 a share. That estimate's probably going to be too low. I think it's just shenanigans to change your multiple just because. I don't care if it's 19. I don't care if it's 20. It's significantly higher than here. And what a 20 multiple is more a statement of conviction. Like, if I get it right exactly, it's luck. It's total wet luck. You're doing valuation based on directional move. And the directional move should still be higher. So tariffs at the end of August, does that change my view? The ultimate answer is no. And unless it has enough power to make earnings go negative. But isn't it going to slow global growth? You mean like the 90s when we ripped higher both in valuation and earnings? You mean like the middle part of this cycle where we had pretty big corrections in 2011, 2012. 2016, we thought the whole globe was going into recession. And that proved to be a low. So I think we have to be careful and remember this is a service-based economy, or 25%, about 25% of global GDP. We are interest rate driven, we are credit driven, and credit is still flowing pretty well.
So, Tony, tell me why I'm wrong if I look at a company, and I know you don't want to talk about a specific company like Restoration Hardware, but the company comes from a mid to high 30s effective tax rate, gets dropped down to a lower mid 20 effective tax rate. I'm guessing those are in the ballpark. How does that not mitigate whatever exposure they have to tariffs?
So here's a great point, Stephen. Let's take it away from that one. What's priced into the market? So you look at a company like Fastenal. We don't follow it. I don't comment on specific stocks. This is not a recommendation in any way. Look at how the stock reacted to earnings. It's an industrial name that was getting hit with the rest of the market, came out with earnings that beat expectations, and I think last I looked, it was up like 10% on the day. So the point isn't, think of Facebook. Back when, remember, Facebook was getting revalued because it was going to have regulatory risk. How many shows were done on Facebook's revaluation on regulatory risk? That one we do have a buy on at Canaccord, and we didn't move. That was the buy point. You could have been early by 5, 10%. Kind of felt like an idiot like I do on banks recently. But that's your buy point. That's not your sell point unless you have an identifiable recession in sight, which is predetermined by an inversion of the curve, and the tax rates are just helping.
Real quick, I'm sorry, Mel. Quick question or no? Quick, corporate debt to GDP, 46% basically now, the largest it's been in quite some time. Is that a concern?
This is going to end so badly. You cannot fix debt with exponentially more debt. But as the yield curve narrows, it accelerates that. If you need to make a certain return as a credit fund investor and your returns are coming down, how do you get that needed return? Well, you lever it. And then it shuts off like a switch, especially in shadow banking, when you invert the curve, which is why that's my thing. You guys saw me earlier this year. I'm not always bullish. I will always buy weakness unless you've already inverted the curve. And just as a reminder, your median gain from the date of inversion of the 210 spread over the last 7 cycles is 21% over an additional 18 and a half months.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.